Hi everyone, welcome back to my commerce class. Today I'm going to discuss with regard to the foreign branch account. So in the previous class I have taken the branch account problem. Now we are going to work out on foreign branch account. Okay, so foreign branch means an Indian company having a branch in a foreign country and wants to know the result of the business. For that it has to maintain the books of accounts in the head office, and while work out the problems they have to convert the values based on the exchange rate what is there. So after conversion they have work out the trial balance will be prepared, and then as usual branch account and other accounts are prepared. Okay, now I take a simple example to understand that with the trial balance. Okay, so let us see the problem. Mahindra Tech Limited, Mumbai, has a branch in Toronto, the Canada. The branch is an integral foreign operations of Mahindra Tech Limited. Following the trial balance of branch, that's a Toronto branch, as on 31st March 2025, which is presented in Canadian dollars. It is given the Canadian dollars. Okay, so take a simple information to understand the problem related to exchange rate. Okay. Opening stock 25,000 given in Canadian dollars, purchases 60, advertising expenses 18,000, sales 1 lakh, equipment 50,000, short-term loans 30,000. And this is the Canadian dollar. We have to convert into the Indian rupee. For that, they are given the additional information, that is exchange rates. Historical rate for equipment, that's usually historical rate is taken for fixed assets. Here we have equipment, so for that sake they are given in bracket equipments ₹60 per Canadian dollar. And closing rate, the rate at the on the date of the closing the accounts, we call it as closing ratio, ₹61 per Canadian dollar. The average rate of the year, that's ₹60.50 per Canadian dollar. So based on that, we need to prepare converted trial balance for that date. Okay. So first we have to understand we have three types of exchange rates: historical, closing, and average. So how these three rates to be considered for different information or particulars what is given in the trial balance. Okay, let us understand. The historical rate is always taken for fixed assets. Okay, the assets which have been accumulated in the business, maybe land and building, machinery, plant and machinery, equipments. Okay, all installed machineries. For all that, we have to apply historical rate for conversion purpose. Okay, the exchange rate. And the closing rate of that particular period of time, that is to be considered for all current assets and current liabilities. Okay, cash balance, bank balance, debtors. Okay, any other current assets and liabilities. For that we have to consider the closing rate, exchange rate. Okay, and we have an average rate of that particular period of time. For that is to be taken for all receipts and payments, what happened in that particular period. So that means receipts means any sort of income, and payments in any sort of expenses, including purchases and sales. Purchases is considered as payment, and sales is considered as receipts, income. Okay, so including that also any rent paid, salary paid, all comes under the expenses, like interest received, dividend received. Okay, any money received by sales, everything comes under the income. In that way this classification is done. Based on that, let us make a conversion. Okay, values are converted based on the exchange rate what is given in the problem. Look at this is the working. Opening stock Canadian dollar 25,000. Opening stock is a current asset. For the current asset we have to take the closing rate. What is the closing rate is given? 61. Okay, like that we have taken here 61. And 25,000 into 61 will get 15,25,000 converted into Indian rupee. The next is purchases. As we know, purchase is a payment. Okay, so payment means what we have to do as per the information. Payment means all receipts and payments, incomes and expenses, we need to consider average rate. Okay, so average rate, what is the average rate given in the problem? It's 60.50. So that value is taken here, 60.50. 60,000 Canadian dollar multiplied with the exchange rate of 60.50, so that you will get 36 lakhs 30,000. The next one is advertisement expenses. Again, it's an expenditure and it's also a payment. Okay, so the payment means, again, we have to consider average rate. So average rate is 60.50. 60.50 multiplied with the 18,000 Canadian dollar, that will be converted into Indian rupee of 10 lakhs 89,000. Sales, again, this also income. So all incomes and expenses, we have to consider average rate. It's average rate of 60.50 multiplied with the 1 lakh Canadian dollar, you'll get 60 lakhs 50,000. Equipments, it's a fixed asset, and particularly in this problem they are given historical rate. Historical rate for equipment, that is 60 per Canadian dollar. Okay, so we have to consider 60 per Canadian dollar multiplied with the 50,000, you will get 30 lakhs Indian value. Short-term loan is a current liability, right? Current liability, current assets and current liabilities. We need to consider closing rate. Okay, your current asset and it's a current liability. Closing rate is 61. 30,000 Canadian dollar multiplied with the exchange rate of 61, so that you will get 18 lakh 30,000. So this is the information what they are asked to prepare. They are asked to prepare converted trial balance, the values which are converted to Indian rupees. Based on that, we need to prepare the trial balance. Look at this, converted trial balance. Okay, opening stock, we know that's a debit. We have taken this value. This value is what is given here now, the converted values. Based on that, the trial balance is prepared. Opening stock debit, purchases debit, advertisement expenses debit, sales always credit, equipment as an asset debit, short-term loan liability credit. And when you make this tally, you will get some difference. Look at here. So the debit total, what you will get, 92 lakhs 44,000. But when you make a total on the credit side, you will get a shortage of fund, the amount of rupees 13 lakhs 64,000. Okay, the difference what you get on the credit side will be treated as loss. If the difference comes on the debit side, it is a profit. If the difference comes on the credit side, it is a loss. Loss arises due to fluctuation in exchange rate. Due to fluctuation in exchange rate, there is a loss, and this loss to be transferred to profit and loss account. Okay, so by this way, foreign branch account to be prepared. What we have to remember? We have to remember the exchange rate. The exchange rate may be historical, closing, or average. For all fixed assets, we have to consider historical rate, and for all current assets and current liabilities, closing rate to be considered. And for all receipts, payments and incomes or expenses, maybe purchase or sales, for that we have to go for average rate. With that, this conversion table to be done first, and later, as per the requirement, maybe the trial balance or the P&L account, trading account, whatever it may be, to be done. I hope that you are clear about it. Okay, thank you for watching. I'll come with another concept in the next video.